Yo, what's up you guys? Welcome back to another video. Today we're going to talk about how do you take an entry in the market when it comes to VIX 75, 25, so basically VIX and the gang. I want to share a very simple yet effective strategy with you guys that you can use and apply in the market. It is so easy. It is the easiest thing that you can do for yourself, whether you're a beginner, an expert, claim to be an expert, claim to be an expert's expert, doesn't matter. So without any further ado, let's get straight into it. Now, this one has got all to do with support and resistance, right? Now, when it comes to synthetic indices, right, these things derive from basic price action. There's only technical analysis. There's no Federal Reserve that's gonna come through and speak about VIX 75 and say, you know, there's nothing. Now, I want to show you guys basically how this market basically moves. Now, when it comes to price action, as we know, there's only two levels in the market. Now, whenever you guys see me do these breakdowns, you will always see me do these breakdowns based off technical analysis, right? Now, the one thing that you must understand, as I always say, you always sell at resistance and you want to buy at support. Now, what does this mean? It means that when the market basically reaches that level of resistance, you want to start looking for sells, and once the market comes down and hit support, you want to start looking for buying opportunities. Now, the main question is, how do you buy the market? How do I get into the market to buy? That is the main question. Now, the answer to that is very simple. You apply the same concept that I do on the daily time frame. When I do the analysis, you apply that on a lower time frame as well. Now, I don't want to spend too much time on this video, so if you do want to learn about market structure, I have already done a video on market structure, so please go over to my channel and go search for this video. It's called market structure. This will teach you how to read the market structure, right? There's a couple of videos made on that. Now, I'm not gonna do a video on that. I'm gonna show you how you enter this market based on applying structure, but on the lower time frame as well. Now, I'm gonna use one example, two examples, and then all you need to do is back test it using the same example. So to give an indication, this is the daily time frame. Now, when I do the analysis, you might have heard me say, let me just remove drawings. You might have heard me say that we have had a market that had broken above resistance, and the market now came back to test it as support. Now, once the market hits support, how do you know the market is ready to buy? You use the same concept that I used, which is basic price action. That's it. Just like I said, we had a clear break above resistance, the market came back to test it as support. That's all you're going to do when you drop down onto the 1 hour time frame. So I want to mark this very quickly so that that is not what I'm looking for. So I want to mark this area over here so that when I drop down on the 1 hour, I want to show you guys exactly what it is that I'm talking about. Remember, that was a break and retest, right? Now we go on the 1 hour, and here we can see this is exactly where this market had came to test this previous level of resistance as support. Now remember what I said, you get resistance and you get support. Now you always buy at support and you sell at resistance. When the resistance gets broken, you wait for it to turn support, and that's where you basically get into the market. Here we can see the market had printed multiple structures. Now I'm going to identify this for you guys the same way I would have done it on the daily. There's a structural level and here's a structural level. Okay, now you get into the market the same way here as well. So you wait for the market to basically break above resistance, then you wait for the pullback. That's where you will buy. If you've missed that, here's another entry point. You wait for the market to break above that, come back to test it as support. The same way that it broke on the daily time frame, you'll see the same pattern apply on the 1 hour time frame as well. Now, where would you go and put your stop losses, right? Now, your stop loss always needs to go below structure. So you are going to put your, let's say you entered the market over there, and your stop loss will always be below the structure of where you've entered. Now, that would have been your area of entry, basically where you would have entered. And what you want to do is you just want to make sure that your stop loss is protected by this structure, or it can even be protected by that structure there as well. Now that is one example. Now we're going to try and find one more example before, you know, and after that you guys should get the concept on how you enter the market, because I do get these questions a lot and I've done multiple videos on this. That's not that difficult to get into the market. You basically what I do on higher time frames, you do it on lower time frames. You apply the same concept. That is why I always say you have to wait for market momentum to shift. How do you wait for that? You go on the 1 hour, you wait for the market to break, retest, break, retest. That's when the market momentum shifts from a bearish into a bullish market there as well. So waiting for this to turn over here as well. So let's look at another example, right? Now remember, you have to backtest this. Okay, you can do it on VIX 10, 75, all of that stuff. So let's see if we can apply this one over here as well. Here we have a market that had broken resistance, came back and tested, right? So we're going to use this level over here in the market. Here we're going to use this whole area over there. Okay, so let's drop on the down on the 1 hour time frame, and I want to just remove this bar. There we go. So we know this whole area over here acted as structure in the market, right? Now we're gonna go back here because this is the first time the market, excuse me, because this would have been the first time where this market would have basically came for us to enter. Now because this would have been the first retest over here. Now you can see there the market printed structure over there. There you can see the market basically printed resistance, broke above resistance, came back and tested it as support, and then moved to the upside. You can see it's doing the same thing on the daily time frame, and it's now doing it on the daily. This is giving us confirmation. A break of structure is giving us confirmation that the market is basically ready to move to the opposite side. Now you can do this on a bullish market, or you can apply it on a bearish market as well. This is GBP USD. We can see GBP USD tested resistance, right? Now if this market was at this level, you would have probably seen me say, so we can definitely expect this move to the downside for the market to complete this W formation to the neckline. Now how would you have gone to enter this market? It's very easy. You would have applied the same concept. And remember, if you don't get into the market, don't force your way, don't force an entry into the market. If the market doesn't give you, if these rules are not satisfied in the market, don't force an entry. But I want to show you exactly how these things play out. So this is basically where the market would have given us the opportunity to sell. Now the first thing that we can see is this was the area of support that got broken, and that was the level of resistance. Now we are on the 1 hour time frame. We want to sell the market. So where would we want to sell the market? We're waiting for a break and a retest. Now you can see that this retest might have taken a long time because we broke, then the market came back there. But you can see that level lines up perfectly with that structural level over there. Now if you are a disciplined trader, this is basically where you would have gotten into the market. Your stop loss could have even go above that high, or it could go there. It really doesn't matter. I need you to understand the concept of this. You can see this was a beautiful break and a retest, but you are more guaranteed when you are buying, when you are at these premium prices. So next time you hear me do an analysis and I say that we can expect the market to start moving from this level to the upside, you apply the same concept. Again, if you don't know market structure, go check out that video. Guys, this is probably the second easiest strategy that you can apply on DRIF or on synthetic indices. You know why? Because this market purely depends on technical analysis. That is it from my side. If you do backtest it, please share your thoughts and comments with me also in the comment section below. That's it from my side, guys. Thank you for your time, and as always, cheers for years.